Ladies and gentlemen, good afternoon. Welcome to Kista Corporation 2020 fourth quarter results conference. The two presenters for this conference are Peter Chen, Chairman of Kista, and Jasmine Hong, CFO. They are joined by 5 executives, including Zhou Huang, GM of Information Technology Business Group and Commercial and Industrial Business Group, Michael Lee, GM of Business Solutions Group, Harry Yang, GM of Medical Devices Business Group, April Huang, GM of Networking and Communication Business Group, and Michael Wang, Chief Investment Officer. The agenda of today is as follows, which will take about 1 hour. First of all, our CFO Jasmine will go over 2020 fourth quarter financial results and business highlights. And then our Chairman Peter will share with you our business updates and outlook. Afterwards, we will proceed with questions and answers. You may submit your questions on the website. We will consolidate your questions and address them in the Q&A session. Now, before we start with the presentation, I would like to remind you that all forward-looking statements contain risks and uncertainties. Please spend some time to read the safe harbor notice on slide number 4. Thank you. Now we will start with the presentation. I'd like to hand over to our CFO Jasmine for the Q4 financial results and business highlights. Good afternoon. This is Jasmine, CFO of Kista. Before I start with the presentation of Q4 results, I would like to first give you an overview of our business groups. We have ICT, Medical, BenQ Business Solutions or BBS, Networking and Communication or NCG, and others. Medical, BBS, and NCG together are our transformation-focused, high-value-added business. They have achieved good results. In Q4, they together accounted for 34% of our revenue, growing by more than 30% for 2 consecutive quarters as we continue to move toward achieving the goal of making them account for more than half of our revenue. ICT is our existing business, now accounts for 60%. Under ICT, we have gaming displays, high-end displays, projectors, IA solution products, automobile infotainment, and digital signage displays. Thanks to the continued optimization of the ICT business and the increased focus on higher-end products, we make steady revenue contribution and steady cash flow for Kista's growth. Under medical, we have 2 hospitals in China, including the one in Nanjing and the one in Suzhou, having established for 12 years and 7 years respectively. We also have operating table, surgical light, ultrasound, intraoral scanner, hearing aids, dentistry consumables, as well as dialysis equipment, consumables, and ethanol solution. Under BBS, in the 6 verticals, hospital, factory, retail, energy, enterprise, and campus, in line with customers' needs and pain points, we provide one-stop AIoT solutions combined with software and hardware. Under NCG, we focus mainly on 5G technology. Others, today accounting for 6%, we have BenQ materials, polarizers, and optical films. Each of these big business groups has gross margin of double-digit. Moving on to Q4 highlights, our high-value-added business accounts for 34% of the revenue in Q4 and 28% in 2020. Q4 revenue hit another high, up by 25% YOY. EPS reached 0.9 NT dollar, up by 0.57 YOY. OP income increased by 55%. Net income attributable to Kista increased by 178%. Full-year revenue increased by 13%, highest in a decade. EPS reached 2.54 NT dollars, up by 0.72 NT dollar, which was the second highest in a decade. Despite the negative impact from COVID in the first half, we enjoyed growth due to positive strategic investment in high-value added business and contribution from non-op activities. Net income attributable to Kista increased by 40%. For our medical business group, BenQ Q-Flux Dialyzer was certified by the National Medical Product Administration in January 2021 and started shipping to Chinese customers. Medical Center, the hospital in Nanjing, was qualified as Internet hospital and granted to carry out telemedicine practices. And many departments of BenQ Medical Center in Nanjing was certified as key specialty at the province and city levels, securing a leading position in the local markets, and we also hit a significant milestone in the industry. Moreover, we won 4 Taiwan Corporate Sustainability Awards from TAISE. We garnered the top 10 most prestigious sustainability award for the first time, and Corporate Sustainability Report Award for the second time in a row. Moreover, we won the Growth Through Innovation Award and Creativity and Communication Award. Moving on to our quarterly consolidated statement. Our performance in Q4 outperformed that in Q4 2019. Net sales came in at 57.1 billion, registering a near 10-year high, up by 11.3 billion YOY or 25%. And the growth in OP margin was greater than the growth in revenue. OP income was 2.09 billion, up by 700 million or 55% YOY. Net income attributable to Kista was 1.76 billion, up by 1.1 billion or 178% YOY. EPS was 0.9 NT dollar, up by 0.57 YOY. Compared to a year ago, Q4 2020 had better margin performance across the board. Gross margin was 14.3%, up by 1.5 percentage points from 12.8%. OP margin grew from 2.9% to 3.7%, up by 0.8 percentage point YOY. Moving on to consolidated income in the second half. In the second half of 2020, revenue increased by 25% YOY. OP income 4.1 billion, up by 1 billion or 34% YOY. Net income attributable to Kista was 3.8 billion, up by 2.1 billion or 132% YOY. EPS 1.94, up by 1.1 NT dollar. The growth of profits was greater than that of revenue, and all ratios are also better YOY. Compared with the first half of 2020, revenue increased by 31% from the first half. OP income was up by 1.7 billion or 68%. Net income attributable to Kista was up by 2.6 billion or 222%. EPS was up by 1.34 NT dollars. Compared with the first half, the growth in profit was greater than the growth in revenue in the second half, and all ratios were also better. Moving on to consolidated results for the full year. Despite the negative COVID in 2020, we posted higher revenue, profits, and EPS from a year ago. Net sales came in at 191.7 billion, up by 21.9 billion or 13% YOY from 169.8 billion. Gross profit was up by 3.8 billion or 16% YOY. Gross margin was 14%, up by 0.4 percentage point from 13.6%. OP income was 6.6%, a billion rather, up by 385 million or 6% YOY. In the first half of 2020, due to COVID, our OP income went down by 600 million YOY. But because of a 1 billion YOY profit growth in the second half, we managed to deliver OP income growth for the entire year. Net income attributable to Kista was 4.99 billion, or up by 40% YOY. EPS was 2.54 NT dollars, up by 0.72 NT dollar YOY. Moving on to balance sheet. The amounts and ratios were similar with the previous quarter. Total assets was 170.8 billion. Total debt ratio 65%. Net worth per share 18.32 NT dollars. On an YOY basis, total assets went up by 34.8 billion, mainly due to the recognized assets from Alpha, which became our subsidiary in August 2020. Moving on to key financial ratios. Turnover days was 70 days, ROE 11.9%, up by 1.7 percentage points QOQ. Financial debt ratio was 26%, flattish while QOQ. Revenue breakdown by business. NCG's share was 17%, BBS 11%, medical 6%, others 6%, ICT 60%. The high value added business are NCG, BBS, and medical. Together, they account for 34% of our Q4 revenue, and their share went from 13% in Q1 2019 to more than 20% in Q4 2019, all the way to more than 30% in Q3 2020. Next slide, high value added business. High value added business share increased to 34% in Q4. For the full year, they accounted for 28%, up by 12 percentage points YOY. In 2021, we expect their combined share to also increase. Now we would like to ask Peter to share with us business update and outlook. Ladies and gentlemen, good afternoon. This is Peter Chen, Chairman of KISA. First of all, I would like to thank you for your long-term support. Much appreciated. And of course, I would like to welcome you to participate in today's investor conference. Beginning from 2014, we made a public announcement. That is, we want to make our high value added business to account for more than half of our revenue. And based on that vision, we implement our strategy on 4 fronts: optimizing our existing business, expanding medical business, and acceleration on solution development, as well as deploying 5G network business. Due to our unchanged commitment to this vision and our 4-pillar strategy, we remain committed steadfastly to this vision, and we've made progress. In the initial phase, we went through some difficulties, and the transformation was slower than we would have hoped. And we spent some time talking our partners into joining the grand fleet of alliances. In recent years, our consolidated revenue has been growing for years. Last year, in 2019, it increased by 22 billion YOY. You may ask, what's next? What I can share with you is that, as you can see, we are growing at a faster pace. This year, we are growing faster in terms of revenue and profits. This reflects our strategic deployments over the past few years, because we have a clear strategy and clear direction. And execution-wise, we have the grand fleet of alliances to rely upon. As we bring in more unsung champions into our grand fleet, we expect to generate more synergies. That is why we expect to grow at a faster pace year after year. If you recall last year, in Q3, at the investor conference on November 12th, during the meeting, we said a goal to bring our high value added business to account for more than 50% of our revenue, and we may likely hit the goal this year, or at least come very close to delivering on the goal. Afterwards, we'll work on boosting profits. I would also like to share with you that after that announcement made on November 12th last year, if you have paid attention to our public announcements, you will see that we have increased our stake in Alpha Networks from 43.8% to around 60%. And just a couple of days ago, on March 23rd, we've increased the stake in Sysage from 35% to 51+%. In addition, we are increasing our stakes in AWIN and ACE step by step. So just less than half a year, we have increased stakes in our major partners substantially. This fully reflects the robust execution capabilities of our team. We just made the announcement, then we took actions to follow suit. Why can these adjustments help us improve profits? First of all, through the Grand Fleet, we can support each other in terms of our revenues. And we can help each member of the Grand Fleet to increase its revenue quickly, thereby improving profits. Moreover, we are increasing stakes in our partners. By doing so, we hope that we can contribute the profits to Keystar. We hope we can make more contribution to Keystar's profits and at a faster pace. Moreover, we are doing acquisitions. In 2021 rather, we've acquired BenQ Materials. 10 years have passed. Up until now, we do not need to shoulder the purchase price allocation for some of the companies, so we can improve our profits. We have our Chief Investment Officer here with us. We have a clear strategy for investments, and we are scouting for new partners. We are looking for the unsung heroes, and we hope that we can make quick contribution to the bottom line of the group. We hope that results can be shown quickly. Going forward, we will also take into consideration prime targets for investment. So you can wait and see for more good news from us. Although COVID-19 still lingers on this year, but we hope that the performance can be better quarter after quarter, and we also hope that the world can resume prosperity and vitality. Recently, the shortages of key components and the rising prices have caused some uncertainties for 2021. These would also cause some challenges to our operation. But as I said, what's most important to us is that over the past few years, especially during the past 7 years, we have a clear vision and we are accelerating our growth. We are taking proactive measures. In 2021, we will continue to drive growth in our revenue and growth in our profits. Please continue to support Keystar. I would also like to thank you for your support for the past years, and we assure you that we will do our best to make 2021 a fruitful year. Now I would like to invite the general managers of our 4 business groups to spend some time to share with us some updates about their focus areas. Good afternoon. This is Zhou Huang, General Manager of Information Technology Products Group and Commercial and Industrial Products Group. Q4 2020 was the best performing quarter throughout 2020 because Q4 was the traditional high season. The demand was quite strong and material allocation was greater than expected. If you do a breakdown, you will see that the consumer products such as gaming or entertainment use products perform relatively better. Industrial and commercial products were more affected by COVID because commercial activities recovery was slower and industrial production was paused, so recovery was affected. In 2021, market demand remained quite strong. As the US is going to inject into the market some $1.9 trillion, economic conditions would likely recover, and with vaccinations, daily life will likely resume to normal. And we expect consumer products will enjoy higher growth and commercial industrial activities will gradually recover. Demand will gradually increase. So we are quite positive about this year. However, due to supply side constraints of IC and panels, especially IC, the total amount that the market can produce will be limited. How much will be provided will all boil down to the supply side, especially the semiconductor supply. At Kista, we posted strong revenue in Q1. We will post strong revenue in Q1 because we had a low base period a year ago due to COVID. And at this moment, we are quite positive about the full year performance too. Right now, we are booking material allocations. As long as we can acquire sufficient IC allocation, then we think the growth will be there. Now we would like to invite April Huang, GM of our Networking and Communication Business Group, to also say a few words. Good afternoon. This is April Huang, head of the Networking and Communication Business Group. Under NCG, we have Alpha Networks and Hytron. NCG's revenue in Q4 grew by 1% QOQ and 104% YOY. For 2020 full year, revenue grew by 103%. Besides the growth generated from the acquisition of Hytron, Alpha itself grew by 38%. Thanks to the work from home and telecommuting requirements, sales grew significantly, of which our wireless broadband product line and multimedia digital department also grew substantially. In 2020, our net income went up by 133%. Net income attributable to Kista was 557 million. EPS went up from 0.44 NTD to 1.03 NT dollars. For Q1, we are seeing strong demand, but at the same time, we are experiencing shortages in materials. We cannot deliver our customers' orders 100%, but compared with the same period last year, we expect to see strong growth year over year. Looking ahead of the year of 2021, we will work on 4 pillars to extend our growth. First of all, we will optimize our existing business. We will increase the differentiation of our services across several product lines so as to improve our competitiveness. At the same time, we will expand 5G products and services. For innovation, we will improve new field applications. We will also leverage M&A execution capabilities to improve our brand and system services. Thank you. Now we would also like to invite Michael Lee, our General Manager of Business Solutions Group, to say a few words. Ladies and gentlemen, good afternoon. This is Michael Lee. In 2020, because of COVID, in the past, we focused on integration of IT and OT at the solution group. Due to the COVID situation and material shortage, more and more customers started to focus on improving their OPEX. So over the past year, we are deploying for OT intelligent transformation, and we have achieved substantial growth. Last year, we breached the 25 billion mark for the first time. With smart enterprises, smart retail, and smart manufacturing growth, we are expecting to see growth for 2021 as well. Under our group, we have Sysage, ACE. We also have DFI, Partner, and AWIN. We've made some public announcements for these subsidiaries. Last year, besides IPC, which was affected by lockdowns overseas, growth was muted. Other IT and OT business saw improvements in profits. For 2021, after the strike of COVID, I think enterprises are geared toward digital transformation. So at the moment, we think the trend is going to go upward, and we are prudently optimistic about growth. Now we would like to have Harry Yang, our GM of Medical Devices Products Group, to also say a few words. Good afternoon, this is Harry. For 2020, we've made a big breakthrough in our dialyzer business. We started with building up our channels. We had set a site in Thailand and also invested in Indonesia last year. For our southbound policy, we are deploying in the South ASEAN and North ASEAN countries. Currently, we are operating there nicely. One good news that I would like to share with you, which is a big breakthrough that we've made. In January this year, we obtained the certification of NMPA for our artificial kidney. This is a great feat because the certification that we obtained was actually Class 3 certification. We spent a long time working on this, and finally we obtained the certification, and we started to make shipments to Chinese customers. So this is a big breakthrough for us. In the dialyzer business, we already are marketing to 15 countries around the world, and we will continue to build our presence in China, because in China there are a lot of people needing dialysis. The sales amount that they need for a year is as much as 100 million, and that is why in the future we're going to make more investments in China on this regard. Thank you, all the GMs. I would like to just do a bit of sum up. In terms of 2021, if you look at the sales amount, growth-wise, we expect the number one growth segment will be NCG. This is because that we start to recognize consolidated revenues for this business group starting from August last year. It is also because that this business segment is going to grow nicely this year. Based on the revenue year to date that we have already announced, NCG has been growing quite strongly despite component shortage. The second highest growth segment is going to be BSG, our BenQ Business Solution Group. It saw a revenue growth by 10 billion last year, and we expect to see high growth for this year too. The third growth segment is going to be ICT, and the Industrial and Commercial Product Business Group. We expect this segment to maintain strong growth as well. The fourth top grower will be Medical Group by amount, but if we look at the ratio of growth, the medical business is going to be the top grower, it's likely to be the top growth segment. We have been working on the medical field for many years, and we are now expecting to see 2021 growth to exceed that of 2020. We have high expectations of growth contribution from the medical business. So as said, in terms of the growth contribution, the top one will be NCG, followed by BSG, ICT, and Commercial Industrial Business Group, as well as medical business. Starting from 7 years ago, we spotted the trend and we started to make strategic deployments into the new businesses, including smart solutions, medical business. And we hope that by working on these high added value businesses, we can expand our growth and to drive growth as well as overcome challenges on the market. So this concludes my remark. We would like to proceed with question and answers. Dear investors, you may upload your questions on the website. In the interest of time, we will consolidate all the proposed questions and answer them during the session. The first question is proposed by investor surname Huang. The question is about the stock dividend for this year. Hi, this is Peter. Thank you for your question. Last year, our EPS was 2.54 NT dollars. For this quarter, we haven't made decision on stock dividend distribution. We expect that the decision will be made at our shareholders meeting in May. Because we haven't made a public announcement, but I can perhaps share with you at the moment that the payout ratio will be more than 50% this year. Thank you. The next question comes from investor surname Chen. You said that the speed of annual revenue and profit will accelerate for 2021. Does that mean it will exceed 40% for profit growth? We expect to see growth in terms of profits and revenues, but as far as how much they will grow, we cannot give you an answer at the moment because of the uncertainties on the external environment. But what we can be sure of is that revenue and profit will be better than last year. We expect this year to be quite promising. The next question is proposed by investor surname Sun. Your display business performed really well under COVID, and the performance was also very good in Q4. You expect to see good performance this year. However, with vaccination starting, do you expect to see a drop in sales? Thank you for your question. We will have Joe to answer this question. Hi, Mr. Sun. During COVID, because of the work from home and study from home trends, display business has enjoyed strong growth. But as COVID gradually eases, industrial and commercial activities will recover. As we stay at home, as we hunker down, we are getting familiar and used to using large screens. So even when you return back to office, you will no longer settle with your notebook computers. You will continue to buy monitors. As up until now, we think that consumer demand has not been fully fulfilled and supply tightness will remain. The next question also comes from investor Sun. You mentioned that you have shipped dialyzers to customers in China. What does that mean? We have Harry Yang to address this question. Good afternoon. This is Harry from the Medical Devices Products Group. Shipping to Chinese customers, this really means a lot. It is a milestone because for any medical device, you need to get certificates. Being able to obtain the certification in China means that we have obtained a quality certification. As for our future development, we will have end-to-end services for our dialyzer product. We will have channels to products and markets in China and Southeast Asia. With the certification in China, we will be able to expand our scale in China, which is a 100 million units market. And going forward, we will also expand our footprint in Taiwan and Southeast Asia. Right now, we have a production line in China, and we will be able to have end-to-end service for products and channels. So getting that certification is quite a milestone. It will help us to have a fuller and more comprehensive roadmap. Hi, this is Peter. I would like to add a few points. In Taiwan, artificial kidneys sell about 10 million units a year. In China, that's 100 million units, and it is growing rapidly. Dialyzers are Class 3 medical devices in China. It usually takes 3 to 5 years to obtain a certificate, and our team has been really efficient. We got the certification rapidly. This means that we have achieved a certain level in terms of product specifications and functionalities, and we are able to meet market demand. Moreover, we have a strong team in China to help us build a solid foundation. We are very confident in our marketing capabilities, and we can expand our services across the Greater China region. Thank you. The next question comes from investor surname Chen. You mentioned that in your networking communication group, you have Hytron and Alpha. Could you let us know the role that Hytron plays within the group? We have April to address this question. Good afternoon, this is April. Hytron is a brand company within NCG. Alpha, on the other hand, focuses more on contract manufacturing. Hytron, on the other hand, is a brand-focused business. Besides that, the two companies' product lines also vary. Hytron focuses mainly on wired broadband products. So you can see energy could emerge from these. Hytron has overseas business and it has grown to a certain level. Now it needs an addition of more product lines to expand its business. So the focus of Hytron going forward is to bring the networking products from Alpha Networks into its portfolio to complement its capabilities. The next question comes from investor surname Zhang. Are you mainly focusing on China for your smart solutions? It seems that you increased stakes in Sysage and most of its operations are in Taiwan. We will have Michael Lee, head of the Business Solutions Group, to address this question. Good afternoon, this is Michael. Sysage within our group is the key force of our IT product line. In the beginning of January, we made an announcement that we have already invested in Corex. This is a company in South Africa. It contributes to 5% of the Sausage revenue. Besides Sausage, we also have other companies within the group that have operations in China and other countries. We are doing marketing efforts collectively. By doing so, we hope that we can extend our leadership in Taiwan to other markets as well. The next question comes from investor surname Xu. You mentioned that the medical business is growing quite nicely. Do you expect it to grow by more than 100%? We have we have Harry Yang, GM of our medical devices products group, to address this question. What we are seeing now is that the performance this year will be better than last year's, but we really cannot guarantee that the growth will be more than 100%. In addition to dialyzers, we also have many other product lines that we expect to see growth. So the performance this year will be better than last year's. We do apologize that we cannot provide you with actual numbers, but we can assure you that the growth will be stronger than a year ago. Ladies and gentlemen, please hold on a minute as we consolidate the proposed questions. As we are consolidating the questions, this is Peter. I would like to take some time to add a few points. In terms of amount or ratios of growth, we have already asked our GMs to say a few words and let you know about their expectations. But one thing we have to stress is that we continue to work with our grand fleet of alliances, and this strategy will remain unchanged. Over the past several years, we've worked diligently, and after we made the investment, we work even harder, because for Grand Fleet, it's all about sharing resources and the pursuit of win-wins. We also hope to generate synergies so that we can accelerate the revenues and profit growth of our partners. We have brought on more than 10 partners into our fleet, and our efforts have gained recognition from the industry. So much so that some hidden champions come to us proactively, expressing hopes to be part of our grand fleet. By working with them, we hope that we can continue to expand Taiwan's influence around the world. So the growth potential for this year is quite clear. Besides the growth of our business groups, we will also be working on expanding our grand fleet in hopes of bringing more partners to our lineup. Recently, we are going to bring in 2 or 3 more partners, and we expect them to provide us with new sources of revenue and profit growth. So this is what I wanted to add. I believe that the acceleration will only get quicker and quicker. This question comes from investor surname Zhao. What is the fundraising amount that you have mapped out for this year? With that, how much will your capital increase? What are the purposes for the fundraising? When do you expect to make the fundraising this year? We will have Jasmine, our CFO, to address this question. Currently, Kista is still growing rapidly, so we carved out fundraising plans for our working capital, but we are just making preparations. When there's some significant growth opportunities, then we will make private placements. Currently, we are planning for a private placement of 195 million shares. That will represent an equity dilution of 9.91%. Such a plan has been proposed for several times over the past years. This is Peter. Let me add. Basically, we're just making preparations, and we are doing this year on year. And we are doing this because we want to make speedy adjustments whenever there's a need, so that we can make more responsive plans and to address our requirements more quickly. We are not targeting any specific candidate at the moment. This question comes from investor Sernan Hong. You mentioned that you expect high growth from your medical business. Could you share with us the performance of your hospitals? Thank you. This is Peter. Thank you for your question. Thank you for your support and attention to our hospital business. We have gone through the past several years running steadily, and we are delivering healthy results. To be quite frank, this hasn't been easy because in mainland China, to operate hospitals, to achieve steady performance, it really requires the hard work from the team. It is especially so for last year because there was COVID. Especially in Q1, people hunkered down and were fearful of visiting hospitals. But at the same time, hospitals had to deal with a lot of hygiene requirements and COVID prevention measures. Still, we managed to deliver healthy results from our hospital business for last year. Revenue were flat YOY, even though there was a drop in the first half. And we regained our growth momentum in the second half. In Q4, our revenue even went up by 15% YOY. During January and February of this year, despite COVID, our hospital revenue have regained momentum, and profits are also recovering to normal levels. So for the hospital business, after the challenges brought upon by COVID, our team has grown stronger and we have become much healthier than before. We expect to see profit and revenue growth to accelerate this year. And we also expect to see more contribution from our medical business. This question comes from two investors. You had net non-op income of 1.6 billion, growing significantly YOY. Could you tell us why? Do you expect to see growth this year too? We have Jasmine to answer this one. This is mainly because of equity method. Last year in 2019, we booked loss, and in 2020, we posted profits. Also, we had one-time profit, mainly the consolidation of Alpha into one of our subsidiaries. That is why we had non-op income for 2020. As for 2021, because non-op operations are highly uncertain, there are more changes likely. But under the equity method, we think there will be some positive development for us. In the interest of time, we will answer one last question. This question comes from investor surnamed Chen. Could you tell us the impact from component shortage and material ASP increases to your revenue and your gross margin? This is Peter. The questions really calls upon issues that affect all of us in the industry in Taiwan. As mentioned, many raw materials such as semiconductor, metals, and plastics are seeing prices rising. It is especially so with chips. Whoever gets to pay the most will get the allocation. And there are so many restraints recently. A lot of things have caused some disruptions on the supply chain. For example, there are some issues with customs clearance for cargoes in the US. And also yesterday, I think all of you have seen the news. There's a big cargo blocked the Suez Canal. There are some fires, and I see supply shortage all adding to the mix and causing the situation to worsen. These cause great challenges for the supply chain. At Kista, of course, we are impacted. But if you look at the industry in the first half, demand far outstrips supply. So although momentum is there, it will all boil down to whoever gets the key components. Moreover, it's also important to be able to make finished products. If you cannot really make finished set products, then you will end up with lots of inventories. If you can assemble your parts into a finished product and deliver them to markets that require them, to get your products to your customers as fast as possible, then you will be free from many worries. But I can tell you, this is exactly why we want to build a grand fleet, because scale matters. When you have a big scale, when you have teams of partners, then you can support and help each other. We can form a joint force. We can chase allocations of resources more aggressively. We can lower risks and also expand our bargaining power. While some people may not be able to get the key components within the grand fleet, we can have a joint force and we will be able to do that better. That is why we believe that a grand fleet and a bigger group will outperform the rest of the industry. So this concludes my remark. But ultimately, I think numbers will speak for themselves, and I would like to ask you to wait and see, to expect greater things from us. We will do our best to show you that we can overcome the challenges associated with tight supply of components, and we will do our best to generate good results for 2021. This concludes our fourth quarter 2020 results conference. Thank you all for participating in Kista's investor conference. We will upload the audio and visual files